Hey everyone, it's Alan Brochstein from 420 Investor and New Cannabis Ventures, here to let you know what happened in the cannabis market this past week, as well as to discuss our upcoming newsletter at New Cannabis Ventures, which will go out tomorrow, Sunday morning. So first of all, we broke a 2-month winning streak. The cannabis sector pulled back, I think 4.6%, something like that, after having rallied 6.6% 2 weeks ago and then 9.9% the next week. So a little bit of a pullback. It was a disappointing week for me, just rooting for the cannabis index to end the month up. Instead, it dropped by a whopping 0.2%, and this extended the losing streak to 13 months. So as I told my subscribers at 420 Investor, when we break that streak, I don't want it to be by a little, but by a lot. So unfortunately, another month of decline, albeit very small. And I'll talk more about that in a moment. The week ended very well, though, with the market rallying on Friday. So hopefully the month is off to a good start. In terms of some of the important news during the week, once again, the House of Representatives passed legislation, the MORE Act. It's dead on arrival at the Senate, and I found it interesting. In the past, this has gotten a lot of attention. It's really pushed the Canadian LPs up, and I think the market made a mistake Friday a week ago, running up stocks like Tilray and Canopy Growth, but it sure figured it out pretty quickly this time. Excuse me. And so when it was all said and done, there wasn't really that much of an impact. And if you look at the MSO stocks, I mean, they didn't move one way or the other. So I think the investing public has kind of gotten wise regarding these legislation things. And in the past, traders have, whipped up others into a frenzy, and the media has gotten carried away. This time is a little bit different. I do hope for that day when there truly is some change at the federal level, which I'll also talk about a little bit later. So with that, we in the weekly newsletter, we include our most important news that we publish, links to the most important news that we publish during the week. A lot of the news that we publish tends to be curated press releases. These curated press releases are typically around financial reports. Obviously, we've had a lot of those, M&A and capital raises. And then we also publish our own proprietary content, not as much, but it's the good stuff if you ask me. And that tends to be the interviews that we publish, as well as reviews of markets. We didn't have those this week in terms of cannabis sales in certain markets. Index reviews, we had a bunch of those this week. And then also I'll be working tomorrow, I believe, on the revenue tracker. We do usually a monthly, sometimes bi-monthly, or it's not bi-monthly, I guess twice a month during earnings season, this being that month that we do that. So we already published one in mid-March. I'll get one out tomorrow, I suspect. So taking a look at the curated press releases this week, one of them was a capital raise, and I thought this was really good news. Innovative Industrial Properties said that they were going to sell 1.5 million shares. They ended up selling close to 1.6 million, raising 300 million. The deal could be increased by 15%, so that'd be 345 million if that plays out. So why is this good news that IIPR raised all this money? Well, first of all, that's the kind of money that gets recycled into the cannabis industry to fund capital projects through sale-leasebacks, number one. So good to see that the money continues to be available to the cannabis industry for sale-leasebacks. And then two, I thought it was great that they priced it at 190 and the low of the day was 194, which means people that bought it are happy, and we can probably raise more capital down the road. Not a disaster. Probably a good sign for IIPR, which is down a lot this year. So that was the first piece. The second piece of news was Green Lane's Q4 revenue increased 36% sequentially to 56 million. This quarter included a full quarter of contribution from Kushco, whereas the prior quarter included only 1 month. So that's what helped drive the growth. It's actually shrinking a little bit as they get rid of certain non-profitable lines of business. On the M&A front, this one was interesting and certainly can help us to better understand why MedMen backed out of its deal with, or is trying to back out of its deal with Ascend. So we had RIV Capital buy a New York cannabis company. I'm sorry, I don't know how they pronounce it. It's either Etain, which sounds cool, or Etain. But one of the original operators, one of the original 5, currently there's 10, for $257 million, mainly in cash. And so you may not recall, but Riv Capital used to be Canopy Rivers, and they went their separate way from Canopy Growth. They moved from the TSX to the CSE, and they partnered with Hawthorne Collective, which is part of Scott's Miracle-Gro. And Scott's Miracle-Gro invested a lot of money into Riv Capital through a convertible note, which makes this permissible. And so effectively, people need to understand you have Scott's Miracle-Gro jumping into the cannabis industry. So I did find that to be interesting. Very high price paid, and when you think about what Verano paid to buy all of Goodness Growth, it sort of suggests that the prices for New York licenses have gone up. The next piece of news was Tilt Holdings reporting their Q4, and their revenue increased organically 1% to $54 million. And then finally, probably the biggest news of the week, and something I discussed in depth today in my weekend video with my subscribers at 420 Investor, TrueLeaf kind of disappointed this quarter. It wasn't a terrible report per se, but it was their outlook. And so it was significantly lower than, and it's in the press release, it was significantly lower than what had been expected. But I would suggest, people are conditioned to this. We've seen a lot of this already, starting with Curaleaf, right? And so the story is old about how the cannabis industry is seeing slowing growth. I would remind everybody it is growing, it's just slowing growth. And the reason for this is that some markets have become more competitive. Now, TrueLeaf they're not sitting there waiting on New Jersey, so that's not really the problem because they're not in that state. Their main states of operation are obviously Florida, as well as Arizona and Pennsylvania. And so, I saw some people questioning in the media about the guidance. So, it's conservative. And I had told my subscribers at 420 Investor to expect this because Kim Rivers and her team are very conservative. And this just continues a trend of lowering the bar. I think, death by 1,000 cuts isn't fun. We've seen some cannabis companies continually lower their outlook. And so TrueLeaf gave annual guidance and never changed it. They pretty much met their guidance last year. And, I think it's nice to see that they're coming out with conservative guidance. Hopefully they do better. And I would just, again, remind everybody they are growing, and they are growing organically as well. So, so that was really the big news. And why was it so important? Well, TrueLeaf stock didn't go down. So, anytime, at least from my perspective, when a company puts out quote unquote bad news and the stock doesn't go down, I think there might be a sign there. So this was a very busy week for New Cannabis Ventures on the exclusive content and just hitting them in alphabetical order. The first one was one of the 4 index review pieces that we did, talking about the American Cannabis Operators Index being down 4% in March. And it was actually down 4.2% to be precise. And so this part of the market had done a lot better early in the year and kind of underperformed this month. That index includes mainly THC operators, but it also has some CBD. The CBD companies actually helped a little bit this month. So the second one was similar. It was about the ancillary companies, and they were actually up 2.7%. You heard me say earlier that the overall market was slightly lower, and so that was kind of bucking the trend. And what was really interesting to me, and you can see the names in the article, was, we often expect cannabis companies to move in unison. And something I've been telling my subscribers at 420 Investor for quite some time is that this is going to happen less and less. We're going to see swings in between subsectors like we did this month, where the ancillary stocks were up and the operators were down. But even within those subsectors, and especially this month for the ancillary, we had, MAPS, WM Technologies was up, I don't know, 30, 40%, something like that, big number, but they weren't the only ones that were up. Leafly was up about 25% as well, and there were some others that were double digit. But we also had, I believe, 3 names that lost a ton. So definitely, if you're an investor in the space, you're going to have to understand that not all these stocks are going to move the exact same. So the third one was about the Canadian market, and it fell 1.4%. So actually sounds bad, but virtually unchanged. And even there were some big differences. So the largest Canadian LPs, i.e. Tilray, Canopy Growth, Hexo Organigram, I leave out Village Farms because they don't have a Canadian ticker anymore, but I have left one out. But the largest ones by revenue, Hexo Organigram, Tilray, Canopy, and thought there was one more. Organigram, I said. They had a very strong month, whereas some of the others were kind of weak. And when it was all said and done, and you look at the quarterly performance, there weren't very many changes. So it was kind of a catch-up for the largest of these LPs this month. The next one was one of our interviews, and we interviewed Chicago Atlantic, which went public in December, and it was doing really well. I think it might have declined this month, but we had interviewed them, I believe, in September, October, November, before they went public. And, they're very similar in some ways to AFC Gamma. They're both mortgage REITs, different from IIPR and NLCP, NPW for that matter. And one of the things I learned from the interview was really what they're trying to accomplish. I think we all are aware of how they were early on with Verano, and it's a big part of their portfolio. But where they're really focused is not the large MSOs. Where they're really focused are operators in a single or dual states. And then the next one was another index article, and that was the Global Cannabis Index. I've already kind of talked about that. Again, when you read the article, you'll see how just very big dispersion between the best performers and the worst performers in that index. And then the final one was another interview, very timely. There's a piece going around written on Bloomberg about cashless ATMs. And if any of you are cannabis consumers, I know you've probably run into this at some point. And I remember one of the first times I bought cannabis in Colorado back in 2014. I bought pizza, apparently. I thought that was really weird. So the interview, by the way, is with CanPay. And we'd never interviewed Dustin, the CEO there, but he did submit a guest piece a few years ago. And so CanPay operates in several states now, and they have facilitated over $500 million in credit in transactions, in cannabis transactions. And so they use ACH, Automated Clearinghouse. This is a legitimate solution, and they work with a lot of MSOs. And it was a really interesting interview, but he pointed this out in that guest piece several years ago, and also talked about it in this interview about how a lot of people are really skirting with illegality when they're doing these payment processes. And, it really helps. Our industry has traditionally been very heavily cash oriented because MasterCard and Visa and Discover, American Express, they won't allow consumers to use these cards for cannabis. So their transactions, their payment processing is actually compliant. So it's kind of timely and interesting considering this Bloomberg article that I've seen shared a lot across social media. So with that, that brings me to the last part of our discussion today, which is each week in our newsletter, which you can subscribe to, or you can also read it on our site. We try to share one idea, and something that really caught my attention this week, and it's not a new idea, and hopefully you're already aware of this, but it's 280E taxation. And what caught my attention was, and I don't think Truliev's the only one to necessarily do this, but I've paid attention to these filings, obviously, for many years now. And I've already written about the onerous burden of 280E. 280E came about, it's Internal Revenue Code 280E, came about in the 80s, back in the Just Say No days. And it was a way to punish Miami cocaine cartels. And it required them to pay higher federal taxes than an ordinary company. And essentially, if you're not familiar with it, and even if you are, it can be a little tricky. I think the way I like to say it is that it's a tax on gross profits. That's probably the easiest way. It may not be exactly correct, but you can't deduct anything except your cost of goods. So I believe that what I'm saying is actually correct. So you pay taxes on gross profits, and so when it comes to taxation, these companies in the past haven't really done a great job of telling you exactly what it is, but I don't know what's changed, but Trulieve really did a good job, and we have the graphic. I shared it on Twitter this week, but they did a really good job of breaking out what their taxes would be if they weren't a cannabis company, and then the extra tax they pay due to 280E, and it literally says 280E in this table. I noticed as well that GTI breaks it out. There says non-deductible expenses. It's the same idea, and it is outrageous. A lot of things are outrageous about the hypocrisy in with how the federal government treats the cannabis industry, but they sure rake it in, and it is disgusting to me how much of the profits from state legal cannabis operators go to the federal government. This is taxation without any representation whatsoever. So I talked about what this means for the companies, what it means for their shareholders, and how things might evolve over time. So that was it. Very timely after seeing this disclosure. Kudos to Trulieve for displaying it the way they did. So with that, I'll wrap it up, and I'll remind you, if you like this video, I know this sounds a little tacky because I see these people all the time, like it, subscribe, but seriously, I'm getting good views. I'm going to continue to do this. Next week, I may have to take off due to vacation. I know I don't really vacation, but I have a time commitment that day. We'll see. But it's a possibility I won't be doing it. But in order to receive these videos, all you have to do is subscribe, and they'll show up in your inbox. And again, you can subscribe to our newsletter, which comes out on Sunday mornings. And if you don't want to receive those by email, you can also just go to New Cannabis Ventures. If you download our app, you'll get alerted when it's published as well. And of course, if you like some of this discussion and you want to learn more and maybe earn more, I don't promise that, but if you want to learn more, consider joining 420 Investor. We've been at this now since late 2013, so we're wrapping up we're halfway into our 9th year, and a lot of happy subscribers, and you can join, and if you don't like it in the first 30 days, you can leave and get your money back. So with the cannabis markets looking like they may have bottomed out here, I can't think of a better time. Sadly, I get most people joining after the market's already gone up a lot. So I'd love to see people join right now when we're down 13.3% year to date after declining in 2021 as well. Take care, everybody.